The Small Business Administration just doubled down its borrowing limit from $5 million to $10 million. The limit goes into effect July 4th, and it is a complete game changer for small-based business owners. So I'm going to break down exactly what this means for business owners here today and how you can use this to your advantage to grow your company, to get access to these funds, and to build your wealth. Without further ado, let's dive in. Now, to understand how this new $10 million limit works, you have to look closely at two very different government loan programs that can now be used together. The first program is called the 7A loan. I want you to write that down. This is the government's most popular financial tool because it's highly flexible. Business owners typically use a 7A loan for everyday operational needs, such as buying inventory, purchasing existing businesses, covering payroll costs during slow seasons, or just getting general working capital. This is the basic loan every business owner is able to qualify for through the government. Now, the second program is called the 504 loan. I want you to write that down. This program is designed strictly for buying major fixed assets, which includes things like commercial real estate, factories, warehouses, or very large expensive machinery that will last for decades, like forklifts. In the past, the government put a strict $5 million total cap across both of these programs combined. This meant that if an entrepreneur used $4 million from a 7A loan to buy out a competitor and stock up on inventory, they only had $1 million left under the cap to then go buy a building. For a rapidly growing company, that old limit was a major roadblock. It often forced mid-sized businesses to halt their expansion plans just as they were starting to succeed because traditional bank loans without government backing were just too expensive or too risky to secure. So, this is why we like stacking the two programs together. The new rule changes everything by treating these two programs as separate but connected paths to capital. Now, a qualified business owner can get up to $5 million through the 7A program and another $5 million through the 504 program at the exact same time. This clever restructuring allows a company to take care of its immediate cash needs while also buying a massive new facility without running out of borrowing room. Now, by separating the limits, the government has essentially doubled the financial runway for ambitious companies. But let's talk about the special allowances for domestic manufacturers. If you're a company that manufactures goods inside of the United States, the rules are even friendlier and offer extra flexibility for you. The government wants to rebuild local supply chains and bring factory jobs back to American soil, so they allow small manufacturers to stack multiple 504 loans together on top of a fully maxed out 7A loan. This means some manufacturing projects can actually stretch past the $10 million mark if they meet specific public policy goals, such as reducing energy consumption, creating a higher number of local jobs. They're very simple qualifications, but we have to identify the target borrowers for expanding on these credits. Getting a $10 million loan is a massive corporate responsibility, so the government has very strict rules about who qualifies for these funds, and yes, I'm going to explain them. The very first hurdle your company must pass is officially counting as a small-based business under government guidelines. Now, these guidelines depend entirely on your specific industry. The government looks at either your average annual revenue over the past few years or total number of employees to decide if you fit the bill. For example, a heavy manufacturing plant might still qualify as a small business even if it has several hundred employees, while a retail store or a service business is measured strictly by its yearly sales numbers. What about target industries for high limit funding? You see, beyond your physical size, lenders will study your industry. They'll study the type and your day-to-day financial health. This high limit funding is specifically designed for companies operating in expensive, fast-growing fields that require huge amounts of upfront capital to continue to scale up. Think of sectors like logistics, or sectors like heavy construction or healthcare clinics, or even modern agriculture. If your business requires a fleet of semi-trucks, a climate-controlled warehouse, or a specialized diagnostic medical piece of equipment, you are the exact type of borrower that the government wants to help with this new policy change. Next is financial health and cash flow requirements. You see, to get approved for an 8-figure loan, your business must show a clean financial history with very strong, very steady profits over the past 3 years. A bank will not approve a $10 million request based on a good idea alone. They need to see hard evidence of historical cash flow. Underwriters will perform a deep study of your financial records to calculate something called debt service coverage. This simply means they want to make sure your business generates more than enough consistent profit to comfortably pay back the new, larger loan payments every single month while still having plenty of cash left over to manage normal daily expenses and unexpected emergencies. But what are the rules regarding ownership and affiliates? You see, finally, you must understand the rules regarding business ownership and entity structures. Next, we'll talk about ownership and affiliates. If you own multiple companies, the government will apply what they call affiliation rules. This means the finances of all your different businesses might be grouped together when calculating the $10 million limit. Furthermore, any individual who owns 20% or more of the company will be required to provide a full personal guarantee. This means your personal credit and your financial habits will be reviewed just as closely as your business operations. Why? Because the banks want to ensure that the people running the company are fully committed to its long-term financial success. Next, what are the strategic benefits of a $10 million government-backed loan? Securing $10 million through a standard conventional bank loan can be incredibly difficult, can be stressful, and also expensive for an expanding business. But one of the biggest benefits of using these government-backed programs instead of traditional commercial loans is that you do not have to put down as much cash up front. With a normal commercial bank loan for a major project, banks routinely demand a down payment of 25 to 35% of the total cost out of your own pocket. On a $10 million project, that means you would probably have to hand over nearly $3 million in cash right at the beginning. Now, under the new government structure, the down payment requirement can drop to as little as 10%. This means you only need to provide $1 million of your own capital instead of $3 million. You can see how much favorable this is for small-based business owners. By saving that extra $2 million, your business keeps a massive cushion of liquid cash inside its bank account. You can use that preserved money to hire new staff or buy extra inventory or even launch aggressive marketing campaigns as you see fit, or just cover unexpected transition costs as your business continues to grow. But this opportunity drastically lowers the overall risk of the expansion because you are not draining your emergency reserves just to cover and close on the deal. What about lowering your monthly payments? You see, another massive benefit of these SBA loans is that you get much more time to pay money back, which directly protects your monthly cash flow. Normal commercial bank loans often feature short repayment terms of like 5 or 10 years, and they frequently include risky balloon payments where the entire remaining balance comes due all at once. The SBA-backed programs eliminate that stress by allowing you to stretch your payments out over 25 years for real estate investments and up to 15 years for major equipment type of investments. Now, spreading out a multi-million-dollar loan balance over a quarter of a century keeps your monthly payments much lower and more predictable, wouldn't you agree? And that predictable expense gives your business vital breathing room during slow economic months or seasonal downturns. Furthermore, because the federal government guarantees a large percentage of the loan to the bank, the lender's risk is minimized. This safety net allows the bank to offer much lower interest rates and fewer hidden fees than you would ever find with a conventional commercial loan, saving your business hundreds of thousands of dollars over the lifetime of the debt. So the next question I'm inevitably going to get is, Karlton, how do I apply for high limit financing? Of course, applying for $10 million is not an easy task. And when you combine the loans, take time, the organization of all your documents, the professional partner you're going to need to work with, guys, you can't simply walk into a local retail bank branch down the street and say, it's go time, let's get the funding. You need to find a financial institution that has been awarded preferred lending program status by the government. In case you didn't know that. These specialized banks have proven to the government that they know the rules inside and out, which gives them the authority to approve loans faster on their own without waiting for a central government agency office to review every single page of the file. The most important thing that I'm going to teach you here today is you're going to need to build your financial advisory team. In addition to finding a preferred bank, which your financial advisory team can find that bank for you, you need to connect with a local nonprofit organization known as a certified development company, because these organizations are set up specifically to manage and deliver the 504 real estate portion of the loan package if you want the real estate portion of the 504 loan package. Working with a bank and a development company that already has a strong history of collaborating on joint projects will make your application process much smoother and much faster. Next is gathering your corporate paperwork. Once you have a good idea of your financial team that you want in place, then you need to start the massive task of gathering your corporate paperwork. This underwriting package must have no flaws. It needs to be flawless. You will need to provide 3 consecutive years of business federal tax returns, your detailed profit and loss statements, up-to-date balance sheets, full personal financial statements for every owner who holds a 20% stake or more in the company. You will also need to submit a comprehensive debt schedule. Why? Because this is going to detail every single dollar your business currently owns to other lenders or vendors. Next is crafting your growth plan. The centerpiece of your application package will be a highly professional, detailed business plan. This plan must include a clear use of proceeds breakdown that shows exactly how every single dollar of the $10 million will be spent. Yes, every single dollar. You must prove to the underwriters that the $5 million from the 7A loan will successfully drive new operational revenue, or why are they going to give you the loan? And that $5 million from the 504 loan, that needs to be safely anchored to value, long-term assets like a new building. They're not just going to give you these loans. Your business plan must also include detailed financial projections for the next 2 to 3 years. Have you done that yet? Showing exactly how the expansion will generate enough new income to cover your loan debts is how a lender wants to do business with you. This is how you get loans. Next is navigating the review and closing process, because after your paperwork is completely compiled and submitted, both the preferred bank and the certified development company will review your application package together at the exact same time through a dual underwriting process. The bank will focus on your daily business operations and cash flow to approve the 7A portion first. Meanwhile, the development company will review the real estate appraisals, the environmental impact studies, and construction budget to approve your 504 portion. Now, once both sides complete their reviews and issue their formal approvals, the closing process begins, because this is a large, complex transaction involving a bank, a nonprofit organization, and the federal government. The closing will require careful coordination between all legal teams. The bank will often provide a temporary bridge loan to fund the construction or property purchase immediately. Once the property deal is finalized, the government issues a long-term bond to take over its share of the debt, officially cementing your low-interest 25-year rate. Congratulations. The operational funds are deposited directly into your business bank account. Have fun. Giving your company the multi-million-dollar spark it needs to scale up, to beat the competition, to win the battle, and to get to the finish line. You're ready to get to that next level of corporate success now. That's all I got for today's video. I hope you guys enjoyed this one. I really wanted to break this one down in a way in which you can actually understand it. But as always, please help me out. Don't forget to like, comment, and subscribe, and pick up a copy of my new book, The Art of Legal Tax Avoidance, by clicking the link below. Also, if you're making at least $700,000 per year and you want to cut your tax bill in half, book a call with my team. There's also a link in the description for that. Finally, if you want to learn other ways to secure government funding for your business, check out this video I did a few months back right here. It's going viral. I think this one would be very helpful for you, especially some of you new business owners. As always, thank you so much for watching, and I'll see you guys in the next video. Cheers.